heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Today, all eyes are on Nvidia. Markets are on hold as investors are anxiously awaiting the crucial earnings report.
Plus, the AI earnings parade continues with Salesforce and Crowdstrike results also after the closing bell.
And a critical 24 hours for Telegram, as CEO Pavel Durov's 4-day detention ends as a French judge is pondering pressing charges. But first, let's just check in on these markets. We are under pressure. We are down by 0.3% on the S&P 500. We're off by 0.9, let's call it a percentage point on the Nasdaq 100. Why is that? Ed, it is because the market weightings of one particular company, which is about 6% for the S&P 500 and about 8% for the Nasdaq 100. I think you're going to dig into which one it is.
Yeah, we will hit Nvidia hard. There's actually a big piece of news out about super microcomputer as well. This is a 3-day chart. The session, the stock's down 24%, on track for its biggest drop since 2020. At one point at session low, biggest drop since 2018. They are delaying the filing of 10K, annual financial disclosures, 24 hours after short seller Hindenburg issued a critical report and made numerous allegations, which we will get to later in the program with Bloomberg's Brody Ford. Nvidia is everything in the moment. The stock is down 2% near session lows right now. We are worried about what happens with earnings because it impacts markets at the index level. It tells us the state of play for the investment cycle in AI. It's a big hour of Bloomberg Technology ahead and a big 24 hours for this name in the market, Caro.
Big half an hour if you're going to be tuning in a little bit later as well. Just phenomenal what we need to be watching in on. Fiona Cincotta, I'm pleased to say, is with us, senior analyst of Citi Index Financial Markets. Fiona, this is an important macro event from your perspective?
Yes, completely. I mean, we only need to look at the charts, really, of Nvidia and overlay the S&P or the Nasdaq to really see that correlation and how strong it is and how much sort of movements in Nvidia actually also move those indices and sentiment more broadly. You know, this is something that we can see having an impact across not just the financial markets, but also move into currencies and other risk assets as well. So, you know, it's definitely one to watch. And I think there's so much riding on that because of this impact that it can have, because this is really, it feels like the litmus test for the AI trade. You know, it's really something that's able to test the enthusiasm of that AI trade, how it's doing, whether there's more upside from it. And considering the rally that we've seen both in this stock and in the S&P and the Nasdaq, it does sort of raise concerns and a few questions of, you know, are we there? Are we at the sort of top of this rally? Yeah. Or are there more legs to go?
To that end, Fiona, should you be hedged to the downside? And if so, do you do that from an index level, from an S&P level, or more micro-focused?
Yeah, you know, I think there is reason to be a little bit cautious here because obviously, as I said, we've had a phenomenal rally. You know, this stock is up 160% so far this year, 788% since the end of 2022. So, you know, these numbers are phenomenal. It is producing growth, but because of these lofty valuations, it does just raise that question of a little bit of disappointment. Can have quite a big impact. So I think you can even hedge this on an index level with the S&P, as you highlighted. It does have a weighting that's quite heavy, and particularly with the Nasdaq as well, you can see a hedging potential with that one as well, just because of those correlations that we see within the moves. And I think if you do have a hedge within the Nasdaq, obviously that's not going to be a perfect hedge, but it does just, I think, open you up to a little bit of risk protection. But then, you know, there are other factors that are also driving the market right now. As we know, we've got, you know, US core PCE, the Federal Reserve also in focus.
They say this is the most important corporate earnings since the banks amidst the financial crisis. They say whatever Jensen Huang discloses about Blackwell will be dissected and analysed like it's a Fed meeting or Fed presser. Just reflect on what it's like for you in the markets right now, you and your colleagues at Citi Index, what people talk about, how significantly they assign the importance of this moment in their careers?
Yeah, do you know what? I think that's a really good comparison there. You know, we're really feeling this as that sort of moment where we had back in 2008 when the banks were very much in focus, and now we've got this really feels like a sort of section in the road where we're focusing on to see where this AI trade is going to take us. So really, really important for us. Obviously, it has been the talk of the desk and the talk of our clients for quite some time. This has been in focus, particularly since we've seen that recovery from the August 5th low and the sort of prices drive higher. So yes, this is very important for us and our clients.
How interested are your clients in the energy sector and the energy side of the data center story?
You know, it's a really interesting one, isn't it? I think that side of the play is just really much more coming into focus now than it has been previously. You know, that idea of where we're going to get the energy from, nuclear energy play, I think that could be very much the second side of this story, which hasn't, I don't think, really been fully explored and fully played out to its potential.
Fiona, how frustrated are your clients that they have to be so exposed to a few mega cap names, to an Nvidia, whether they like it or not?
I think there hasn't been too many complaints, just because there has been so much sort of hype surrounding it. So because of that, and because of it's been hype on the plus side, we've seen some strong rallies. This has been a good trade to be on the right side of. So on that side of things, there hasn't really been too many, I would say, distressed complaints. But I do think that there is also a keenness among our clients for the rally to start broadening out much more than what it has done. And I think that's something that we'll be looking forward to happening potentially as the Federal Reserve moves forward with those rate cuts. And starts to see sort of the economic picture changing. But I think, you know, having that broadening out of the rally, we haven't quite got there yet, but that will be something that I think that traders will be looking forward to going forward as well.
And so does that automatically going out of tech and into small caps, or is there a broadening out of names within technology that people can analyse from a global perspective too, because you're sat in London and there's some key European names?
Yeah, completely. You know, and I think it was interesting because I think at the start of this week when we saw the Dow Jones reach record highs and we saw the Nasdaq and the S&P sort of coming lower, there was that sense of potentially, are we going to start to see a rotation out of tech and into stocks that are potentially more economically sensitive, you know, on those expectations that potentially the Feds will start cutting rates next month. So, you know, I think there is a sense that we could be getting to that stage soon. As you said, geographically speaking, there are other alternatives to be looking at, but I just do wonder whether I think that might be a little bit premature given the economic picture and the economic outlook potentially in the Eurozone and in the UK compared to what we're looking at in the US at the moment. So I do think that there will come a time when there will be sort of more opportunity for geographical diversification, but I'm not sure we're quite there yet. But that's something to be keeping an eye on.
Fiona, let's end here. What's the biggest headwind or risk to the technology investor through the end of 2024?
Wow, good question. So, do you know what? I think there is a big risk surrounding a slowdown in demand for AI. What we know right now is that a lot of companies, even outside of tech here, I'm talking companies more broadly, are very interested in AI and what it can do, and they see it very much as a key part of their future. But what we need to be able to understand is how much of that can be transferred to higher earnings in the near term. And I think that's where this question sort of really comes down to. Are we a little bit overbought in the AI play near term? I don't think we are long term, but I wonder if we are near term. And I think if that does start to come to the surface, then maybe that could be a big risk for the rest of this year.
Yeah, that taps into the question being asked, the anxiety being felt by a lot of people everywhere. Thank you, Fiona Cincotta, Senior Analyst of Citi Index Financial Markets. Programming note, tonight, an earnings exclusive with the Nvidia CEO in a special edition of Bloomberg Technology. You don't want to miss it. That's 6:30 p.m. Eastern, 3:30 p.m. Pacific time. Now, coming up, French authorities weigh the future of Telegram CEO Pavel Durov. We take a look at the possible outcomes next on Bloomberg Technology. See you in a minute. Telegram CEO Pavel Durov's detention in Paris ends after 4 days after allegations he allowed criminals to use the messaging app unfettered. So what's next? Bloomberg's Paris bureau chief Alan Katz joins us to discuss. And basically, there is now a specific judge pondering the issue of charges, Alan.
That's correct. So the way it works is that he was interrogated for I would say roughly 90 hours about. And then he was taken just about an hour ago, a bit more, to see a judge, an investigative magistrate, really. And what that person will do is decide whether or not to actually charge Durov for any of the 12 things that he's alleged to have done, which is mostly aiding and abetting criminality on the app, or at least certainly turning the other eye against it. And that could take a relatively short period of time, or it could take hours. It's really, we really don't know how long this particular portion of the process will take.
And what's so interesting is the background of Pavel with France. I mean, I think it was a few years ago, Macron was hoping that he moved the business there. Ultimately, he's a French resident, citizen at least. But why has France taken this action? Why this country? Why this government?
So that's a good question. So he is a French citizen, and he has been since 2021, and he became a French citizen under a process for people who have done exemplary things for the country. It's unclear what exactly. Le Monde, the French newspaper, did a big investigation into this last year and didn't really come up with a good reason for why he was given French citizenship, but he does have it. And the question of so you have to separate, though, a bit the political from the criminal. So in this case, there is a criminal case for alleged lack of content moderation for particularly things about child sexual abuse materials on the platform that Durov didn't do anything about, allegedly. And that's very different from sort of the political process about giving him or anyone else citizenship. So France, like the United States or like the UK, those things are often quite separate. So one doesn't necessarily really play into the other.
We'll have to see how this continues to unfold and indeed what the judge does indeed decree. We keep up to speed with it with Alan Katz. We appreciate it. Now, look, the Telegram CEO's arrest has actually sparked concern among some of the other key names when it comes to social media and the industry, high-profile decision makers who are worried that the French authorities have created a threat to free speech globally. Kurt Wagner has been writing about this exact thing in the Tech Daily newsletter. And look, there's Elon, Linda Yaccarino, Jack Dorsey, all are weighing in here, Kurt.
That's right. I mean, this has caused a lot of concern from folks who are running similar platforms, or at least other social networks that probably have to deal with this type of content moderation. You know, on the one hand, they're saying, hey, look, this is a real threat to free speech, right? The government comes in, they don't like what's showing up, and suddenly the CEO is arrested. What kind of precedent does that set? And I think that's why you're seeing folks like Elon, like Linda Yaccarino, even Jack Dorsey over on Nostr, which is a sort of different social network that he now uses quite regularly. You're seeing them start to push back on this idea that any one individual should be held accountable for what shows up on a platform with, you know, in this case, hundreds of millions of users.
It is a fascinating week for social media executives everywhere and the broader issue of oversight. I'm thinking, of course, about Mark Zuckerberg's letter to the Judiciary Committee. You also reflect on that. It's impossible to almost, but tie the two stories together, and it's government oversight of specific issues.
Yeah, I found it interesting that, you know, Mark Zuckerberg sends this letter to D.C. saying the Biden administration pressured us to remove COVID content. You know, they sort of warned us about this Hunter Biden laptop story, which ended up being a legitimate story, but we acted on their behalf. And, the timing of this, right, that him sort of acknowledging, hey, governments have pressured us to do things. We should have pushed back more. The fact that he's having this, letter, he sent this letter right in the midst of all of this all of these issues that are going on with Telegram and Durov, I don't think is a coincidence, right? I think he's trying to simply raise his hand and say, look, it's not just Telegram where, there's a feud with the government. It also happens at the big players like Meta here, and we're going to take a different stance than perhaps we have over the last couple of years. Perhaps I'm connecting dots here, but I do think the timing is quite interesting that he would suddenly bring this forward after years after it happened, right at the same time as this Telegram incident.
Well dotted, Kurt. There's a great line in your piece that really resonates with me. You say, it's reasonable, I think, to be a supporter of free speech while simultaneously fighting against content that could get people killed or ruin a child's life. These things don't need to be mutually exclusive, Kurt.
I don't think so. And I think this was the point of my newsletter this morning, was that, you see the supporters of Durov coming out and saying, hey, what's going to happen to free speech? Is this government overstep? And the point I wanted to make was simply, we're not talking about a political free speech in this case. We're not talking about someone who said something that the government just didn't like. We're talking about someone who, is alleged to have turned a blind eye to real crimes, to real terrible crimes that could, ruin lives, right? And I think that you can be a free speech supporter while still saying, well, what can we do to prevent child pornography from flourishing on these networks, right? And so I hope that those two things don't feel too black and white. And right now, I think a lot of the discussion is making them that way. I think there's a nuance in between that a lot of people would probably agree with if they can set aside this, one or the other mentality.
Kurt Wagner is a Bloomberg correspondent who literally wrote the book on the history of Twitter and Elon Musk's takeover. And you have deep experience of these platforms from the early days to present day. What I'm trying to get the sense of is, right now, what is the type of content, or where does the line get drawn by the companies themselves? Because I remember Meta, or then Facebook, saying, we shouldn't be responsible for this. Someone else needs to take over.
Yeah, I mean, historically, I think that line in the sand was always around what, they would call offline harm, right, or real world harm. So is something that's being done or said on, Telegram or Meta or X, is that leading to violence offline? Is that leading to, human trafficking offline? If so, that's where the line gets drawn. I think what we're sort of seeing is people push back on that, right? We're seeing certainly Elon and Durov and others simply saying, like, we kind of want everything to be out there, whether it's, perhaps criminal or not. And so I just think this is constantly going to be a tug of war between where stuff gets taken down and where stuff is allowed. I think we need to, it's continuing to just shift, and we're seeing that shift happen right now.
Bloomberg's Kurt Wagner, thank you very much. Now, coming up, Supermicro taking a hit after Hindenburg Research said it short the maker of server equipment and made serious allegations in its report. That's next. This is Bloomberg Technology. Time for Talking Tech, and first up, Apple took the rare step of cutting about 100 jobs in its digital services group, according to sources. The layoffs included some engineering roles, and the biggest cuts were made to the team responsible for the Apple Books app and Apple Bookstore. Layoffs are relatively rare at Apple, though the company's made at least 4 rounds of reductions in 2024. Apple declined to comment on the cutbacks. Plus, BYD said the timing of its lithium project in Chile remains up in the air as the Chinese electric vehicle juggernaut continues to negotiate with authorities in the South American nation. In April last year, BYD was granted access to preferential prices for lithium carbonate produced by Chile's SQM, but terms are yet to be settled. And Supermicro shares plummeted Wednesday after the company delayed filing its annual financial disclosures. The move comes a day after short seller Hindenburg released a critical report alleging glaring accounting red flags, evidence of undisclosed related party transactions, and other issues at the server maker. Supermicro said in a statement it's not updated its financial results for the prior quarter or fiscal year. Karen.
Let's stick on that story because it is a big share reaction for Supermicro. Brody Ford is across it, and there seems to be genuine concern there from an investor perspective.
It's not a good look, right? I mean, you have this report came out. The reaction was fairly muted yesterday. But then you announce that, hey, we're delaying our financial filings. And for a company of this scale, that is very rare. We've had only 2 other S&P 500 companies do that this year. One of them was Autodesk, and that's led to many problems over there. And so I think for investors, delaying the reporting, it validates some of the anxieties brought up by Hindenburg yesterday.
Brody, as you know, I have some experience covering companies, the subject of Hindenburg short reports. What is it that Hindenburg alleges basically against Supermicro?
Yeah, I think what's relevant here with the accounting issues is that general idea of maybe recognizing revenue too early. It's worth noting that today Supermicro didn't say exactly what's delaying the 10K. They said they need to look into their processes around their reporting, which, I mean, right, it's a lot of jargon. But what's crucial and maybe a little anxiety inducing for investors is they said, we have not updated our financials. They didn't say we will not, right? Because in other cases, we see companies say, we do not plan to update our financials. And so they left that a little bit open here, which is driving some of the palpitations, right?
I mean, palpitations, which, back in 2020, they resolved an investigation from the SEC about accounting and disclosures for 2014 to 2017. Too much deja vu. Push us forward, though, because you don't just cover this stock, you cover a multitude, Autodesk, but also what's happening with Salesforce. Yeah. On a day that Nvidia gets its results, poor old Salesforce is also trying to announce some stuff.
Yeah, well, while Nvidia is clearly making money from AI, poor old Salesforce and poor old rest of the software sector is saying, guys, don't forget about us. We can make money from AI, too. And that's what we're watching for tonight. Is there new AI features and products actually raking in revenue? Or are customers really not ready to pay for it yet? Because so far, it's been the latter.
In May, they gave us a clue very quickly. Does the forecast hold up for Salesforce?
Yeah, a lot of folks are worried about that revenue, right? I mean, it used to be really easy to get companies to buy software, and now they're saying, whoa, how did I end up spending all this money? And so it is tough. I mean, we saw this with Workday as well. It is tough to eke out the extra percentage points of growth the way it used to be able to.
Salesforce on deck after the market closed. Bloomberg's Brody Ford, thank you very much. Now, coming up, again, a preview of what to expect when Nvidia reports its quarterly results after the close of trading today. That's next. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
And we've got to do just one name that is affecting all these benchmarks. We are awaiting Nvidia earnings. Why does it matter? Because it is some 8% of the NASDAQ 100 in terms of weightings. It is some 14% of the stocks of that key chip index, which is down by 2.3%, and every single name is falling today. Nvidia is off by 3.3%. We've got some anxiety brewing ahead of these numbers. Let's get right to it and the broader market implications of Bloomberg's Carmen Renicky. And Carmen, it feels as though this could move significantly, the benchmarks, and the stock of Nvidia in and of itself could move a lot. What are options pointing towards?
Yeah, so you're totally right. Options traders are basically looking for a move of nearly 10% in either direction for Nvidia. And this is huge because the company's market cap is north of $3 trillion. So that big of a move could be $300 billion either added or subtracted to the market. And obviously that has huge implications not only for shares of Nvidia, but for the S&P 500, the NASDAQ, the SOX, all of those indexes that you were just mentioning. It has a huge weight in them. So what this company reports is really important for everyone going forward.
We're showing this brilliant chart, which is the big earnings swings that Nvidia has gone through. I know it's something you included in your report this morning. What do you make of that, Carmen?
I mean, I think the thing is Nvidia is looked at as the most pure play for artificial intelligence. It's one of the biggest beneficiaries of this big market theme this year. And so people are watching it. It's by and far the leader. Its chips are the most sought after. And that gives it, the utmost importance. It's basically being looked at almost as like an economic bellwether at this point. I think the other thing that's important here is that the timing for Nvidia kind of makes it, even more paramount. It comes right at the end of earnings season. So it basically is looked at as the grand finale. There aren't a whole lot of other catalysts moving markets right now. So because of the size of this stock and its importance to this huge market theme, all eyes are really watching Nvidia.
Well said. I mean, look at volumes across most of the benchmarks. They're lower. This is meant to be a holiday week for many on vacation, and yet they're having to stay to watch for this all-important set of numbers. What are the people you're speaking to saying about this so-called macro event? Do they think it should be?
Oh, that's a really good question. I mean, I think because it should be. We know that AI is really important. NVIDIA's results are going to reflect if the demand that people are hoping for is continuing, and if its leadership is, still out there, if that is in question or not. I think when people are one thing that people are looking for this quarter is any commentary on the Blackwell chip, if there's a delay there, how that's going. And so that's just really rolling this all forward and showing what the future could hold for this technology and for this company that's really been at the forefront of it.
Bloomberg's Carmen Ryanecki, thank you very much. Let's dial closer to the Nvidia story, what to expect. Our next guest has covered semiconductors out of Seoul, South Korea, and out of San Francisco for Bloomberg for more than 25 years. We are joined, of course, by Bloomberg's Ian King. And I'm so glad that you're here because you know the sector and the company better than most journalists on the planet. But there is a lot of hype. Let's just go over the basics of what we expect Nvidia to tell us when the earnings statement hits.
Yeah, I mean, the only number that people are really focused on will be the overall revenue guide. It's going to be massively up from where it was a year ago, more than 70%. But some estimates are as high as 37 billion, right, with a consensus at about 32. So there's obviously a huge room there for just how good can this be. I mean, it's not, inline is not good enough for this company and because of what it's been doing recently.
The fact that the market thinks that revenue can keep on doubling quarter on quarter, ultimately, Ian, we heard from Carmen just saying one issue is going to be Blackwell. It's going to be some of those reports that maybe there was a delay in getting subsets of those chips out. What do you make of it?
Well, all I can pass along is what NVIDIA said themselves, which is nothing to see here. We still have a huge amount of demand for our existing products. And what the analysts have said in sort of reaction to the reports that we've seen is, yes, we think there is an issue. Yes, there are some glitches here. But guess what? Doesn't matter, doesn't affect the overall story. That doesn't mean that there won't be a lot of questions on the call for Jensen Huang and his leadership team today.
There are some things that are just like core to companies' coverage. Are they supply constrained and able to get their amazing product to the people that want it? What about some of their specific markets? China, historically really important. They face trade barriers in that instance. Those kind of things, what do you expect to be discussed?
Yeah, I mean, China has been largely discounted from a lot of their, the earnings estimates for this company. It's really been locked out, can't sell its best stuff there, and it's only likely going to be able to sell less there. So that's no longer sort of front of mind for a lot of people. But, really the focus is we've put all of this gear into these data centers. Are they being used? What's the economic benefit? Can this keep going? That is the fundamental underlying concern and question for this company, and that's the kind of questions they'll be facing today.
Ian, you've been tuning into these earnings calls, presentations, well, as Ed so eloquently put it, and aged you a bit, more than 25 years. What do you think, if we're tuning in right now and we're getting to a party, there seems to be all these watch parties going on today, what do we expect? How does it generally pan out over the course from 4:20 p.m. onwards in New York time?
I mean, the answer is in the name of the person who's going to be on the call, Jensen Huang. He has a story, a very clear story in his mind that he wants to tell, and he will tell that story regardless of the questions he gets. He's a gifted speaker, he's a gifted presenter, and he knows exactly what he wants to say. So don't expect precise answers, don't expect, details. Expect him to try to drive forward a narrative of how he sees things going. So maybe some frustration there for some folks, but he's very good at what he does.
He's the founder. Ian King, we so appreciate it. Thank you very much indeed. For more on what to expect from Nvidia's earnings report, someone's going to be dissecting it. Daniel Pilling is with us, Senior Research Analyst over at Sands Capital. Daniel, well, what would you want to hear from Jensen, regardless of whether he actually tackles it? What is the number one piece of information you want him to give you today?
So I think the number one piece of information is confirmation for ongoing scaling law improvements. And so the idea is to say that you're throwing tens of billions of dollars at AI, and AI continues to improve. I mean, we heard Mark Zuckerberg on his earnings call saying that training their next model is going to be 10 times more compute intensive. Those types of comments are very important for the long-term story of NVIDIA. And I think actually the core focus of the call is probably going to be on some sort of theme like that, because that drives the growth of the next 1, 2, 3, 4, 5 years. So sort of are scaling laws still holding true, and what's the evolution of AI within that?
So it's quite a long-term picture you want, Daniel. And what's interesting is everyone's suddenly using this horrible turn of phrase of sort of return on AI. Does it matter what the return on that investment is if companies just have to stay in the game no matter what?
So I think some companies are already benefiting massively, right? Like Meta, for example. I mean, they've added $1 billion in market cap and started growing 20% because of AI. But I think actually for now, the question of ROI is too early. And I'll tell you why. First of all, we're going from this world where we have clusters, AI clusters of less than 100,000 going to 1 million. That means we're going to train way bigger models, way better models in the next 1 or 2 years. So we'll have to see what these models can do to really assess ROI. So that's a big question. The second question is actually, if you go back in time and look, for example, at the introduction of Microsoft Excel, every company in the world had to use it to stay competitive. I'm not sure every company in the world generated more revenue because of it. AI is probably going to be similar. So some companies will generate massive revenue growth, like Meta. Some companies, the ROI is going to be you stay competitive and within your industry, and you have to pass on the benefits to your customers. But you got to do it no matter what. And maybe that comes back to sort of your point. This is a little bit like the space race 2.0. You got to be in it to survive.
Daniel, the story so far has been about the hyperscalers plus Meta spending. That's been all of it. And I wonder to what standard you hold Jensen Huang to demonstrate that there's more than that outside of basically just 5 companies as customers.
Yes, so I think there's actually way more than that. So there's some smaller players, so-called GPU clouds, companies like CoreWeave, Lambda Labs, they're significant customers. And actually the second thing, for some of those hyperscalers, the use case is not internal, but it's actually external. So they're buying these GPUs and they're renting them out to companies that want to train some sort of new application, usually sort of venture-backed type of startups, right? And I think the key thing to look here is when do the Fortune 2000, when do the big companies start going to these clouds and start training their own models? Now, NVIDIA has a solution for that called Enterprise AI. They're trying to make it easy for them, but we have to start seeing that.
Well, Daniel, let me jump in. I mean, I'm trying to actually define what NVIDIA is. Is it a chip company? Is it a systems vendor? And then they have NVIDIA GPU Cloud. And I look at that and go, does Jensen Huang just want to be a cloud provider in his own right?
Yes. So I think NVIDIA is the world's leading system optimization company. And it starts with a chip. It continues with the software. And now they're going rack scale and cluster scale. And some of those systems have 600,000 parts. I mean, that's a big, big problem to solve. Now, I think what the company is doing, I think the idea is more to be the cloud within the cloud rather than a cloud yourself. So it's actually much more lucrative to sell to many, many parties and get a big fee out of that rather than creating your own cloud. So I do not think that NVIDIA will create their own cloud. It's actually just fine to sell through third parties like the hyperscalers and the GPU clouds, et cetera, et cetera.
Daniel, Sands Capital has $46 billion in assets under management. There has been so much zeitgeist, psych, euphoria around this one single name that many have launched ETFs that are double leveraged the particular moves of Nvidia, and you just see the demand near record shares outstanding for Granite shares 2x long Nvidia daily ETF, for example.
What a chart.
These are exactly what a chart. Hat tip to Dan Curtis, we thank him. This is all about ultimately wanting to get long in whatever way you can. What are you seeing, Daniel, in terms of your exposure? How long do you get Nvidia?
Yeah, so I mean, and we'll go over time. Maybe we'll get a bit bigger, smaller over time. But ultimately, I cannot imagine not being invested in Nvidia over the next 5 to 10 years. And I'll tell you super simple why. It's pretty obvious that we're going to need more computing in the future, right? More computing within healthcare, drug discovery, self-driving vehicles, factory automation, enterprise AI, you name it. It's going to go up a lot. And the second thing that's fairly obvious, too, is that Nvidia is a leading company in the world that provides compute, right? And there's a bunch of other companies doing it, too, but Nvidia is a leader. So if you add those two together, it's very likely that Nvidia is going to be a much bigger company over the next 5 to 10 years. Now, that doesn't mean that we don't have a down cycle at some point. It doesn't mean that we have, maybe a bit of an overbuild at some point, and then we go back to, acceleration. But that's sort of how I think about it longer term. It's the beneficiary of the growth in compute needs in the world.
You acknowledge there are other AI accelerators out there, MI300X, AMD, Gaudi, Intel. To your mind, how is it that Nvidia maintains its position as market leader?
Yes, so I think it's a little bit like that Wayne Gretzky saying of go where the puck is. So Jensen tends to be there already, and the others are following a little bit. And it's just beautiful, right? Jensen has seen this 15 years ago, so he started off with the chip. He built the software.
Don't give me that. It's beautiful. We're talking about computer hardware. Come on, Daniel.
You think the same, Ed.
I think exactly the same. Pot calling kettle black. Keep going, Daniel. Sorry.
So it's sort of this idea of like you went from one chip to a big system and you optimize that over time. But in order to do that, you need many parts, right? You need the software, you need the hardware, you need the GPU. Now they have a CPU, a networking chip, et cetera, et cetera, et cetera. And Jensen has seen this earlier than anybody else, and that continues to be the way, right? The others are catching up. They're doing M&A to do that, and it's fine, right? They're great companies. But ultimately, if you want the cheapest compute, the cheapest dollar per compute, Nvidia is the best company to go to, and it's unlikely to change in the future. And I'll give you one example here. Like, imagine today we got a chip out that's double as good as Nvidia, and they would ship it to all of us. The problem is we wouldn't know how to use it because the software isn't there to use it. Whereas with Nvidia, they've created the entire software stack for each industry in the world, and it's actually easy to use because of that. And we would have to hire people if we wanted to do a third-party chip rather than Nvidia, and that's sort of the secret sauce.
Daniel Pilling, a buy-side desk analyst who has just an impressive command, frankly, of the technicals at Sands Capital. Thank you very much. And a reminder, another one, an earnings exclusive with Nvidia CEO Jensen Huang later tonight in a special edition of Bloomberg Technology. I'll be speaking to Jensen 6:30 p.m. Eastern Time, 3:30 p.m. Pacific Time. Okay, coming up, Meta is closing their augmented reality studio to prioritize the AI business. That story's next. This is Bloomberg Technology.
Now let's just take a look at Meta shares. The company will close an augmented reality studio to prioritize investments in other areas, including, of course, artificial intelligence, it would seem. For more, we're joined by Bloomberg's Asia Counts. So what was this particular studio up to, Meta Spark?
So the studio helped like third-party or independent developers create image and video filters. So, for example, it's one of the things that Snapchat became really popular for. You could open up the app and maybe you're looking at a picture of yourself and you have like dog ears and a dog nose, or maybe you have on jewelry, and it's all digital. It's almost like a filter overlaid. And so Meta offered the same thing. It was almost a way to compete with Snapchat. And so that's what's going away now with this latest announcement.
It is the latest example of the refocus or deeper focus on artificial intelligence, which is the company's strategy right now.
Exactly, right. If you think about even just a couple years ago, it was all about the metaverse, right? Obviously, Facebook changed its entire name to Meta for metaverse. So that's augmented reality. It's also virtual reality. But that was such a big focus of the company. And as we've reported and talked about before, Now it's all about AI. People from those departments moved over onto AI teams. The spending has shifted. They have new AI groups that they created. Obviously, you've seen a lot of new AI products. They're spending billions of dollars. So it's really been, it feels like a huge shift. They'll tell you they're still working on the metaverse, and that's true to an extent. But right now, it's all about AI.
I mean, they lost about, what, $50 billion on AR and VR products through January this year, your story shows. So are they still going to be innovating, iterating in the hardware areas of that, Aisha?
They're still spending on hardware, and they've said that. They expect to continue losing money. But again, I mean, it's just when you go on an earnings call, you hear about the metaverse, you hear about VR, but you hear a whole lot about AI. And they know that AI is really going to get investors going, right? When they started to invest heavily in the metaverse, their stock went down like 65%. I mean, it was one of their worst performances ever, I think ever, as a company. And so they know that focusing on AI, leaning into AI is what's going to get their stock going up. It's going to get investors excited. So yes, they're still spending on the metaverse, but if you think about where the priorities are and what they're doing internally, it does feel very much AI focused.
Bloomberg's Aisha Counts back on Bloomberg Technology. Love it. Thank you very, very much. Now, coming up, we're going to get a look ahead to Crowdstrike's earnings report. Yeah, Crowdstrike after the bell following that global outage last month. That's next. This is Bloomberg Technology. Let's talk about Crowdstrike. Following last month's global outage, the cybersecurity company is set to release their first earnings report since that incident, and it comes after the market close today. For what to expect, we're joined by Bloomberg Technology Senior Executive Editor Tom Giles, and it's weird because the quarter gone, probably quite good. Crowdstrike's good at cybersecurity. Current period, they had a bit of a crisis.
You know, this should have been a great quarter for them. There are so many ransomware attacks. There's so much attention right now being focused globally on cyber threats. And CrowdStrike has a product that people want. Millions and millions of computers around the world are plugged into CrowdStrike, have CrowdStrike on it, constantly monitoring for threats. They have a very unique value proposition, and that's why so many people are into this software. But late July, they had this snafu. It was a routine upgrade, and it just went badly. And we saw the results. Businesses around the world, Delta Airlines. And so we've spoken to several analysts. I've read a lot of analyst reports. And in the aftermath of that report, of that bungled upgrade, a lot of people have put orders on hold, according to the analysts that we've talked to. They've gone out there, they've done their channel checks, and basically the view is there were fewer people placing big orders. There was a little bit of tentativeness around it. There was some concern. So Bloomberg intelligence analysts are looking at that, and they're concerned that we might see some changes in CrowdStrike's expectations for its sales forecast for the year.
I mean, Guggenheim in particular saying that this was a big issue and it might take longer than expected to restore reputational damage. How important, therefore, is it to hear from the executives on this? Because ultimately, it was a bit of a PR disaster as well, the way they handled it.
That's right. There were questions about how quickly, how attentively George Kurtz and the rest of the management at CrowdStrike were being in response to this. Some of the things that were said back and forth with Delta Airlines, for example, some of that aired publicly, some of the blame shifting. You know, when you go to a vendor for cybersecurity or any IT needs, you want to know that the company has your back. And so there were some people who, after this, were asking the question, does CrowdStrike have my back? Or are they going to throw me under the bus when things go wrong? And so reputationally, you want to know that somebody is not just monitoring your network, protecting you from threats. And the threats are very, very real. And CrowdStrike, again, has a very reliable product. But if it's a routine upgrade, is it going to crash my systems? And is it going to hurt my business? And that's what a lot of people are asking the question right now.
We really want to be wondering ultimately whether many people are going to be tuning in for this set of earnings. I'm sure they will be. There's going to be some micro-focused investors very attuned to what Tom Giles has just been lining out for us when it comes to CrowdStrike. But that does it for this edition of Bloomberg Technology, Ed, and actually, it's all about Nvidia for many.
Right, later tonight, a special edition of Bloomberg Technology featuring an exclusive interview with Nvidia CEO Jensen Huang, 6:30 Eastern. This is Bloomberg Technology.